What's up, everyone? Welcome back to another episode of the Indy Investor Pod. This is a podcast that we talk about anything and everything that involves Indianapolis and real estate investing. So we'll talk wholesaling, flipping, private lending, whatever it has to do with Indian investing, it's going to be found here on the podcast. So with that, let's get on to today's episode. All right, welcome back to today's episode, everyone. This is Randy taking over the host for today, and I'm really excited for today's guest. We've got Mr. Paul Hiu coming out from California. Paul, what's going on?
Hey, Randy. Thanks for having me, man.
Hey, no problem. So Paul's a really great person. We actually met maybe just a little bit over a year ago at this time, and I'm just really impressed with what he's done from starting out investing in Indy to where he's at today. So we'll talk about a little bit of his story and get into some, tips and tricks he's learned along the way and some other good stuff to help anyone out looking to investing out of state. So, Paul, real quick, why don't you just give, the listeners here a rundown on why you picked Indy, how you got started into investing in Indy, and just real quick, that story there.
Yeah, thanks, Randy. Firstly, I'll just say that I am by no means feel like I'm at all somewhat qualified to even give advice. I'm brand new and still learning a ton and really trying to soak up as much information as possible. But to answer your question, Randy, I think, real estate's always been something I've resonated with early on. As you guys can probably tell, I'm Australian. Moved here about 3 years ago, and I knew that there was opportunity in the States. I just didn't know where because I was brand new. But certainly, in terms of when I was ready to get started, I've been studying for a good 24 months and really trying to know it well because I knew that I had to leverage, relationships, capital, time, knowledge, all the above to really actually make a dent and actually make it worthwhile. So for me, in terms of picking my market, I knew I was not the smartest guy in the room. I knew that I had limited experience and I had limited knowledge and wisdom about the country and the market itself. And so, I'm a pretty quick study when it comes to putting two and two together and connecting the dots and really just in my hours of researching and studying and researching and reading and really analyzing the markets and the players that are successful in this game, you slowly hear of markets pop up. And then when the opportunity came where I was given the opportunity to be connected with an investor, someone who's actually been doing it out of state, I just leveraged him and a huge shout out to Ernesto, who we all know. Yeah. And really, my whole approach is why work harder when you can work smarter? It's not to denote or demote the notion of hard working, but certainly, I like I said, I'm as green as I come. So I'm going to receive all the lessons I can get. So that's kind of how I picked Indy, and with that, kind of just dove in. So
yeah. That's awesome, man. And I know you're pretty humble when you say like you're very green. You are 1 year into this, but from my eyes, from what I've seen other people try to do in their first year investing, I think you're fairly successful. So you should give yourself a pat on the back there. So starting out, like I said, you're a year in. I guess tell us like how many units you have now. Are they a mixture of just buy and hold? How many flips have you done? Tell us a little bit about that.
Yeah, so all in all, in my first year, we bought 12 and we sold off 3. So 3 flips and 9, single family homes, just single units. So we've got 9 units right now. We're in the middle of more on the tail end of a refinance out of 6 of those properties. When we're all done with that, should be the end of next month. We'll have some more capital to play with.
Okay, cool. And then, I'm sure you've had your fair share of learning experiences in the past year. Let's take some time to kind of talk about anything that maybe some mistakes you've made as an out-of-state investor specifically that, could help someone out who's starting to get in now to kind of, be wary of. But then also after you kind of tell us those stories, let's flip it to any good decisions you've made that's kind of helped you being an out-of-state investor.
Yeah, sure. I guess, you know, you're almost like drinking from a fire hose when you start, right? Like, it's like, it can be really overwhelming. So what I would say to that and encourage others to do is just take it one step at a time, one day at a time. Really, there's a lot of um, things that aren't clear, that are so foggy, but so long as you kind of just take a step forward
Hmm.
within that sort of fogginess, or within that, you know, blurriness of your learning process. I think that's all you got to do, you know. And certainly it was for me. You know, I would read one post at a time, make a call to one vendor at a time, you know, and just really learn. And certainly what I would say to this is, I've been in the real estate industry for about 2 3 years now, and up till recently I was actually a realtor, and I know for a fact, working with realtors, working with clients, buyers and sellers, it's not easy, you know.
Right,
um,
right.
and I've learned from that experience that, I mean, this is a pretty harsh saying, but in real estate, there's a saying that says buyers are liars. You know, they run you around, and you know, they talk the talk, and certainly that was something that I was fairly sensitive to in terms of approaching my first few deals with you all. Um, and so I really wanted to make sure that, because your word is everything, your
Yeah,
integrity is everything in this business. It's such a relationship game. Um, and all the money and all the equity that we generate, it's just a means to an ends anyway,
yeah.
right? It's the way I approach this business, how I approach life. It's all about the relationships and the time that we get with those people that are in our worlds that matter to us. So um, but more specifically probably the mistakes that I've had in my first years is really not, you know, I'm a pretty trusting guy, but and then so when I get
It's that accent,
referrals,
man.
but also on the flip side, I love to just trust others,
Yeah.
and just give people a shot to succeed, because I'm a big fan of seeing other people succeed. Um, and so I think I'm a little bit too easy and relaxed about that process. And certainly when I get referrals of certain vendors, or you know, different people in the business that have had good experiences with other investors, I think one of my biggest mistakes was just, you know, believing their word and not really doing my own due diligence. And I
Yeah.
think that's really important for everyone to note out there. I think, you know, um, there are vendors that I loved, and we've worked really well with, that may or may not work for others, right?
Hmm.
So I think doing a due diligence, you know, getting on the phone with them, not being afraid to ask the hard questions, and saying, "Hey, look, I want this long-term relationship with you. I want us to be successful, but I don't know you, you know."
Yeah.
So being real, but being encouraging at the same time, I think is really really key. Um, and then, you know, they talk about making your money in real estate on the buying side of things, and I think that's something that I've done fairly well.
Yeah.
To give you an example, my latest portfolio of 6 that I'm refinancing out of, I think all in for buy and rehab were around 680,000, and that recently just appraised out to about 1.2, just under 1.2 mil. So I think really vetting your deals, really, your numbers have to work when you go and analyze a deal. But yeah, that's what I'll say to that.
Yeah. No, that's awesome, man. And I know firsthand that you're a very analytical person when it comes to the numbers. So if anyone can do a deal with Paul, that means you got a pretty sweet deal. That's for sure. Um, so uh, you didn't buy anything until you visited Indy the first time, right?
Say that one more time.
You didn't buy anything until like your first visit to Indy, correct?
Right. Yeah,
So do you
exactly.
think anyone out of state that's probably looking to invest now, probably you encourage them to probably visit the city first before making a decision on anything, or would you still buy blind if you've never been to Indy before?
Yeah, good question. You know, there's obviously two thoughts. You know, in this world now, we're so connected through, you know, online, through videos, through FaceTime, through technology, and leveraging relationships, right? But you know, I would say, like, I'm a more of an old-fashioned guy. I like to touch and feel. I like to meet people,
Yeah.
get to know others on a personal level, not just professionally. And so, I've had such a blast getting to know you and your crew, Randy, and you guys are such like some of the most like honest and honorable guys in the business out in Indy. So but you're really not going to know until you break bread with them. And so
Yeah.
I would say on the relational front, that piece is worth it in itself, let alone being able to have boots on the ground, drive the streets, get a feel for it, walk the neighborhoods, meet some of the locals, seeing what they're about, being sensitive to the culture and and the ways that they've lived their lives. You want to be integrating into them, not demanding them integrating into you. So I think I would absolutely encourage and certainly advise others if they're starting out to at least have one trip out there, if not two.
Yeah. Awesome, man. And then one other thing, I guess what I wanted to get into today with you specifically was, man, just you raising private money. And I feel like for a while there, every time I talk to you on the phone, you're like, "Hey, Randy, I've got another 50K I'm working with." And I said, "Paul, like you're always calling me with money to spend. Like, what's your secret?" So I know for you, raising private money is fairly easy. I know for some people it's not, and they don't know kind of where to start. So as someone new, I guess, how would you go about explaining to them like your strategy on, approaching the people that you're trying to raise private money from? How do you go about explaining your strategy into going into these deals? And I guess, how do you structure your stuff so it always works out and they keep on coming back for more?
Sure. Good question. I guess I can just only tell you from my experience and my story, and
Yeah.
I'll start at the start where my first private. When I started, I badly wanted to get in real estate. The old saying go, where there's a will, there's a way, right?
Yeah.
And my will was strong, and I just moved to the country, brand new, and I'm new to the industry, and I had a new child, and everything's new. And so there was a lot online, and there was a lot of hunger inside of me and a lot of drive. And so I had to figure out a way, because I certainly didn't have the capital. And so I was fortunate enough to be in a family of that had, been in the real estate game for about 31 years. And so I was connected to a few people that invest heavily with my father-in-law. And so my first investor, I basically was straight up honest and vulnerable. And I think when you show that honesty, that vulnerability, but in that as well, they can see the drive without you even saying it.
Yeah.
Then it goes a long way, right? And I basically, what I said to him is, I knew this guy was a doctor. He had a lot of money that was available, just sitting in his 401k, in his bank account, in his equity. And really, I just said, hey, I know you don't know me, and I know you're being connected through my father-in-law, and that's not automatically that you should trust me. But at the end of the day, this is who I am, and this is what I'm going after, and I'm asking you to take a chance on me. And really, I'm gonna go out there, and I'm gonna go through my first couple of deals with you, line item by line item, and every angle from the analysis to the rehab to the tenant to the.
So you break it
think
down like every step of the way, and they have a clear picture. Just if they were buying the deal for themselves, they kind of know what's going to happen.
Exactly. And really, it's more like you're involving them so that they feel like they're in the driver's seat almost.
Okay.
Right. And you're really empowering them, and you're not just taking their money for the sake of taking their money, because nobody loves to be sold. And so that's what I did. And I just said, hey, be involved as much as you want. Call me as much as you want. Text me as much as you want. Demand what you want from me. Video. So when I went out there and I looked at 4 different properties, I videoed every single one, uploaded it, and sent him the links straight away.
Okay.
I'd give him my thought process, and I asked him for his opinion. And I think when you consistently involve, your partner, your money partner, I think they can see you. And then the more engagement they have with you, just like any other relationship, the stronger the trust is built, in my opinion. So that's kind of what I did. And fortunately, my first couple of deals, we managed to burr the whole thing out with 20K on top, for
Okay.
the first 2 deals. And so that showed him that, not only was the process in which I kind of described to him initially kind of turned out, but also I was willing to do the hard work yards. I put in the sweat equity and flying out there, meeting the people, and all doing all sort of work. So that's kind of the nutshell. But honestly, guys, like anyone that you might have a connection to, I would just reach out to your sphere and just say, hey, my wife and I we're chasing after our dreams. We're chasing after to build a portfolio, and we're willing to work hard, and I've studied a lot, and would you be willing to connect me with someone that that would benefit from getting a greater return than having their money in the bank? And just reach out, because I've done that, and I've gotten since that one doctor, like maybe 3-4 other investors with pretty big money. And so I think that's kind of, as you start to build a reputation, your friends and family know about you, your sphere know about you and what you're doing, and they're kind of trusting you, and they're jumping on the bandwagon. So yeah,
that's awesome, man. So how many private lenders do you think you have right now that are actively lending with you?
So right now I have 5 in total.
Okay.
Yeah.
And those all came from pretty much cold relationships, or?
Just, really, like no cold calling, but all relationship building. And, the way that you can kind of just talk to them is you can source funds from, 401ks, from, obviously their bank accounts, but obviously like even my latest one is pulling out money to lend to me at a 3% interest rate, and I'm turning around and offering him, whatever it might be. So call it 10%. That's a 7% spread, and so you can kind of explain that to him, right?
So I think, So what it sounds like though is if you're going to approach someone about private lending, you if you're going to pitch that to them, you have to know kind of the ins and outs of it, just as well as anyone, as far as like where the money can come from, how it can be used. And you want to know like their returns that they're going to get, instead of just coming out of the woods and saying, hey, like, can you give me $1 million? I want to buy some houses.
Exactly. I think if you can just put yourself in their shoes, what's in it for them?
Yeah.
And really just make it about them. But at the same time, have your point known. Make sure you're heard in terms of your goals and why you're credible to partner up with on the lending side. So I think for us, it's a relationship game. Just as I said at the start, everything from the money side to the deal finding to the rehab to property management, and then also the lending side. It's all relationships driven, and if you don't put that first, you're not going to get very far, rather than treating it like a transaction. So I would just have that in the back of your mind throughout the entire process.
Yeah. What if someone was coming and they wanted to take down like a big apartment building, but they needed to, maybe group 2 or 3 of their private money lenders together? Would that be a complicated process, or would that be pretty easy for someone to do?
Yeah, look, if you were just starting out, I would probably start off where don't bite off more than you can chew, right?
Yeah.
And certainly my life mentor said to me, hey, Paul, if you want to give this a go, absolutely. But what you got to realize is this: if you're taking a risk, so long as that risk, if you lose out, that doesn't put your family on the streets where you can't feed them or shelter them. If you can handle that, then go for it. But what I love about real estate is that, unlike stocks and other investment, is that it's always worth something, right, Randy? Like, even if the building burns down, you've got insurance. Even if you don't have insurance, the land is worth something. So it's just, that's what I love about real estate. And I think at the end of the day, if you're going to go into a big deal, I would certainly, and you really badly wanted to, I would, again, search the forums of Big Pockets, our Facebook groups, and see if you can create a relationship with them and bring some value add. And what's your value proposition? Are you going to bring the capital in? Are you going to, hit the streets? Are you going to be the one door knocking? Are you going to be, what are you going to bring to the deal as a newbie? You know,
Yeah.
and so that's what I would say to that.
All right. Awesome, man. Yeah. I think, like I said, I think you are better than most people I've talked to as far as quickly raising private money. And that's why I wanted to touch on that topic. So I appreciate you kind of sharing your insight on that. So kind of shifting back to being an out-of-state investor itself. I mean, with everything going on with COVID, for an out-of-state investor like you, how has that changed? Has that changed your strategy at all? Because I know initially you're coming in and the Burr method was kind of like your bread and butter, and you're doing pretty well with that. You kind of did some flips here and there, like you mentioned. How has this pandemic kind of changed your strategy moving forward to buy more properties here?
Yeah, certainly. I think the biggest area that I feel like it's really impacting is the lending side, right? When this
Yeah.
whole thing started, all the secondary markets just clamped down and shut down because of Wall Street just shutting down. And so certainly things have eased up and opened back up slowly but surely, but nowhere near where they were pre-COVID. But in terms of everything else, honestly, operationally, it really didn't miss a beat. And I was thankful for that. And maybe that's just me, but I feel like that's where I felt Indy was such a great hedge.
Yeah.
You're playing in the rental markets of 1,000, 1,500 for the most part. And as rents compress from the 5, 3 to $1,000 a month down, can it compress further below 1,000? Absolutely, right. But I think that's a great hedge. Indy's such a great market for that reason alone. That's another reason why I chose Indy as well. But moving forward, I think I don't have a crystal ball, right? But I think certainly as we go forward, and if you look at our past and and how the market was through the GFC and other downturns, I think there's going to be opportunities. Absolutely. So, in terms of being aggressive and buying up deals right now for the sake of it, I don't think so. I think I'm going to be a little bit more strict on my numbers, whereas I may have been a bit more lenient. But at the same time, if there's deals to be had, I'm not going to hold back. And we'll see how it all plays out between you and I and everyone else.
Yeah, no, for sure. And I think from what I've seen personally, I mean, people are still like the retail side of things. People, if you're flipping a house, homes are still flying off the shelf if it's done right and you price it right. And I've seen people kind of that were the buy and hold buyers before switch to that model because, they want to make sure they don't want to have to deal with a renter who's not paying rent because they're maybe laid off temporarily. So, yeah, I agree. It's going to be interesting to see moving forward. I think here in Indianapolis, late Q4, early Q1 next year, there's going to be a lot of opportunity to pick up some discounted properties because these people are kind of just, hanging on right now. And, hopefully they work it out, but if not, they're gonna have to do something and it's ultimately going to come down selling their properties. So it'll be interesting. Like you said, no one has a crystal ball, but we can just kind of roll with it as it goes and see what happens. So, kind of wrapping things up, Paul, what's outside of real estate, what would you say your favorite part of Indianapolis is? I know you've been here a couple times, so kind of tell me what you like most about the city.
Randy, there's actually a lot. I mean, I grew up in a blue collar kind of suburban area back in Australia, and I resonate with Indy on that kind of spectrum. At the same time, I love the feeling of the promise that I see and hear and read about that's coming into that city. And I think for those reasons also, certainly people invest for a whole variety of reasons, whether it be, appreciation or whatever it might be. But I'm looking at cash flow, and certainly Indy is one of the top markets for that strategy. In addition to that, like I said at the earlier on, I said it was more of a great hedge against a downturn, and we're seeing that right now. It's crazy. During this whole pandemic lockdown, I was rehabbing 5 homes at any one time earlier this year, and 3 of those homes had applicants for tenants. and I haven't even finished rehabbing them. It was just like that's things that you never hear about.
Yeah.
And good quality tenants where the rates were allowing you to cash flow easily per door. And so for those reasons, in addition to that, I've met some fantastic people, just real down to earth people. At the same time, I would say just be aware and trust your gut, and really, just put the work in to really learn the process, and because there are people out there, and unfortunately, the ugly side of real estate is that they can burn you and they can take advantage of you. And certainly for me, it's that's been the way, and thankfully I've been able to get out of it fairly unscathed. And so that's what I would say to all that. And for India, it's become my second home. I think I'm going to buy a Pacers jersey now, maybe a
There you
Reggie
go.
Miller throwback, or a Colts jersey. I don't know, but yeah, I'm excited to get back out there and again, have a drink with you guys and be connected again.
Yeah, no, awesome, Paul. I appreciate that. And just wrapping up again, how can anyone get a hold of you if they maybe have any questions? Can they find you on Facebook, or how should anyone get a hold of you?
Yeah. So my Facebook is Paul Hiu. You can search me up, send me a DM. And then my Instagram is Huey PH, HUEYPH, and you can shoot me a DM on Instagram as well.
Awesome, man. Well, that's going to wrap it up for today's episode of the Indy Investor Pod. Hope you enjoyed it. Hope you took out a lot of great value information here. And with that, we'll see you on the next episode. Thanks, guys.